Good morning, everyone, and welcome to the next episode of Anthony's Journey. So, last time we talked about, getting through 75% of the CPA exam, which is the equivalent of 3 exams, and also working through, my last job, which was at Ascendant Sports. And now we're actually now at EY or Ernest and Young. So, I was effectively off for a little over 2 or 3 months when I first started at EY in September. So now I actually have my first client. So the my first client was actually in a real estate trust fund, and it was definitely something new to me. I was effectively, even though I worked as an accounting assistant for a while, I didn't really understand what auditors do. So just to give everyone a little context, what an auditor does. So an auditor, you could think of them as kind of like a teacher reviewing the work of their students. So essentially, an auditor will come into a company. They would look at all of the numbers that a company produces, look at all the support that they have, and just really understand, are they really recording their numbers properly? So when I was first starting off in auditing, I didn't really understand essentially, like, if I was qualified to be reviewing anything, essentially, since I was so relatively new. So usually an audit team will consist of a staff, a senior, a manager, a senior manager. Sometimes there's a director in there if they need it, and of course a partner. So you have all these tiers of levels, and of course, as especially as a staff, when I first started off, most of my questions would be directed to at my senior. So when I first started, the first word that comes to mind was work papers. So what the heck are work papers? So work paper in the auditing industry is basically where we document our assumptions of all the work that we've done so far. So essentially, one example that I can give you guys is, for example, when we're reconciling the cash account. So essentially, our work paper would look at the client's cash details, and then we would have basically a column saying like, hey, we reconciled this cash to the balance that the client says, and we've also looked at the bank statements just to confirm that the cash payments actually came in, the cash transfers actually went out. And essentially that's kind of like what we were doing. We're effectively checking each every type of work that our client did throughout the year, whether it was revenue recognition, whether it was, looking at their fixed assets, which just basically means like computers, buildings, things that they effectively were depreciating, over the years. So essentially, and just to define what depreciation means, is just basically recognizing an expense for that asset, or let's say a computer, for example, over the life of the computer. So essentially, if it was 3 years, let's say it was worth $1,200, so you would recognize $400 of expenses every year until it's fully depreciated at the end of the 3 years. So essentially, that's what really an auditor does, and in terms of like the more, I would say, the more standard things of what an auditor does, but we also do other things. So auditors also actually do something called walkthroughs, which basically means that we actually go into our clients' processes and look over everything that they do, and essentially document it, usually in a walkthrough documentation. So auditors essentially, I know sometimes it's difficult to say this, but sometimes auditors, we do like to pry into things, but it's not because we want to, but because we really need to do something called UTB, or understanding the business. So when I actually first started off as staff, I was doing all of that. I was understanding my client's business. I was looking through our prior year work papers and just understanding like what we did last year. And then of course, asking my senior like, hey, so what are the types of questions I should be asking? Is there any change in our documentation this year? So definitely it was a lot of new things for me, especially as a first time auditor. So I was pretty nervous at first, but overall my senior, they were great mentor to me. They actually taught me most of the processes and made sure that I was up and running. The one thing that I would say was a little stressful about working in public accounting was that, one, you had to actually keep track of every hour and where it was spent. So essentially, if you worked in let's say 4 hours on the walkthrough, let's say a revenue walkthrough, understanding all the sales of the company, how their sales process is. You would have to document the amount of hours that were there. So yeah, so I would do that usually every week. Every week we would have to tally up our hours and say like, all right, so we spent 6 hours here, doing let's say the revenue walkthrough, 4 hours working on the cash work paper, 2 hours doing this. So that was one aspect I would say was a little stressful, in the just kind of keeping track of all those hours, making sure that you were efficient while you were working on tasks, because sometimes if you work too many hours in a task, then something that would happen usually is that you would go over budget, over your hours, because each of our hours are actually usually billed to our customer or our client. So usually our client is billed for every level, of course, staff, senior manager, director, partner. So it's definitely important to make sure you're being consistent with your hours, being efficient with your hours. And yeah, that's one aspect that I would say definitely was a little stressing, of course. And another aspect I would say that was tough on me as well was that I'm not gonna lie, I'm not gonna sugarcoat this aspect, but it's kind of like you had no work-life balance. So essentially, you would sometimes be working evenings. Of course, you'd be having, like, for example, you would have breakfast, lunch, and dinner with your coworkers. Sometimes you would be working till like 10, 11, sometimes midnight with your coworkers, kind of grinding away, working through work papers, working through documentation, looking at financial statements, which are effectively, just effectively all the numbers that the company has. Usually you'll have an income statement which shows like all the revenue, all the ins and outs of the company, the balance sheet, which would have the all the assets, all the liabilities, and then essentially your cash flow statements, of course. And yeah, so you would look through all of these statements and just ensure that all the numbers tied out correctly to all the support. So overall, it was definitely a crazy time. I'm not gonna lie. I was starting off as a staff, and I was already pushed into a lot. Overall, I was, of course, like, kind of told like, hey, here's all the documentation, here's all the work, just keep grinding through, tying things, ticking and tying, doing all the documentation. And then everything was working out great at first, but then later on I realized that it was a lot. It was a lot of hours. My seniors would usually leave after a while, because seniors, just to give everyone some context, seniors is actually one of the highest turnovers in public accounting, because they usually take a brunt of a lot of the work. They usually are reporting to management, helping them with their items. They're helping me, the staff, with my items. So it is a lot of work, and usually in most cases we would have high turnover in seniors. So I sometimes would be left with no seniors. Sometimes I would have to step into the role of senior myself. I would have to be something called in the industry an acting senior, which effectively just means that you're a staff and you're effectively working a tier higher than what what you are in. And same things for sometimes even for seniors. Sometimes seniors, I would have seniors who would effectively be acting managers, and they would be effectively operating at a management capacity. But of course, for someone who was new to the industry, I didn't really understand what it meant to be a senior or a supervisor, that level. So sometimes there would be times where, I would try to turn to my manager and just say like, hey, like, what are you doing in this instance? And sometimes, of course, they were overwhelmed with their own work. So it was sometimes a little difficult to get information out. And it was, I would say, public accounting is, and the best way I can say this is like, it's like boot camp for accountants. So essentially, you're working in the public accounting industry more to garner knowledge over a short span of time, while also working in a very high stress environment where there's a lot of hours, there's a lot of expectations. But it is something that definitely builds character. It helps build good work ethics, in the sense of like, you're under tight constraints to do the filings for your clients / customers. You're learning a lot throughout the process, reading through hundreds of pages of documentation, sometimes doing something called sampling, which basically means you're taking one transaction, you're following it all the way through by looking at the bank statements, the invoices, which is essentially a documentation that just shows like the sale of, for example, or the cost of a certain item. So yeah, it's definitely was a pretty tough experience. I worked on in over like 3 or 4 different clients. I worked for a real estate company. I worked for a media company, and I actually worked for a company that manufactured general electrical components. So essentially, like it was definitely a mixture of different companies. Sometimes you'd be working on 2 clients at the same time, and yeah, and sometimes it'll be like retail, for example, and like a real estate company, for example, which is the one I was working on initially. You have repeat clients. So overall, it was definitely an interesting experience. I learned a lot. I did have some good teams. I had teams that were a little tough to work with sometimes, just because we were a smaller team, so just wasn't enough time to actually review things together. So overall, I think EY was a great experience. And but after almost a year, I was thinking like, man, this is I would say like a year, actually more than a year, like I would say a year and a half, which is when closer to the end of 2017, I was like, I'm not really sure how long I actually want to stay with this, because I was working so much. I was working so many hours, and just really, the grind was real. Like I thought that I was working crazy time, between studying and having a job, but this was next level. It was something that I never knew that I would experience, working 80, 90, 100 hours a week sometimes, just to meet the deadlines, and tracking all this time, of course. And it was yeah, it was definitely a unique experience throughout my entire career. I won't deny that. Hello everyone, my name is Anthony, and I'm the host of The Lost Sanctuary. I hope you've been enjoying our content so far, and if you have, please feel free to like and subscribe. Also, we have our website up here, and we also have some socials down here. And as always, leave your comments down below. As I was, I kept grinding away at EY. I was thinking of like, hey, what should be my next steps, in my current, path, as an accountant. Like what should I be doing? Because I did feel like my, I was like effectively like just like on the downward trod. I didn't really know what to do, and I actually asked one of my coworkers who was a staff just like myself, and he said, hey, maybe what you should do is you should think about like maybe going back into the private sector, which at that time just means that you're no longer working in the public accounting space, and instead of like reviewing work, you actually would go back to actually performing the work and then getting reviewed by an auditor as well. So as someone who was starting off in the private sector, essentially, where I was the one actually performing the work, I was thinking, yeah, I think this might be the logical next step for me to really take to actually get away from the grind of having to work so many hours, having to keep up with hectic schedules, having to constantly be adapting and working multiple clients. I just didn't feel like this was the path for me. This didn't feel that, even though I was learning and I was making decent salary, it just didn't feel like the calling for me. And I was distraught because I worked so hard to actually get to EY and to Ernst & Young, and then I figured later that it just didn't work, like especially with someone such as myself who I value the time with not just working, but I do highly value the time being with the people I love, and actually understanding that it's not just all about the money. It's about the time you dedicate to not just the money, but also to the people you love. So as I was going through the motions, towards the end of the year, I started to really think about, do I really like, do I continue this grind? Do I actually go back to the private sector? What should be my next move? So before that though, I actually was talking to my mom, and she was saying that, hey, like something that I was hoping we could maybe get into was, of course, buying a house. So I was a little bit hesitant at first. I was like, hey, like, I'm not really sure how long I'm gonna be at this job. Like maybe I could effectively leave for the next couple of months for my job, because of how high stress it was. And I wasn't really sure if I should get into a home right now. It would have been effectively the first house that I would have bought, and it was something that my mom was looking forward to, something that she's always wanted, for us to like move out and get into a house. So, I said, alrighty, I think I can definitely put up with, working a couple more months if I have to. So we essentially started to look into different areas, different houses, and really to understand that, it was actually not a bad call, because it was definitely a change of pace from the city where, you would city life is very like robust and, fast paced. And I definitely enjoy being in the city. But then when I actually started to look at the suburban areas that we were visiting, I was like, wow, this is definitely a different way of life, a different way of experiencing things. There was big backyards, for example. People had their own garages. It was definitely a different experience overall, like just like being in suburban neighborhoods. And we actually focus on different areas, well, on the East Coast at least. So we went to Connecticut, we went to different parts of Jersey. We effectively went to probably like 40 or 50 different places in between like all these areas. And then our realtor actually recommended this one place, which I'm glad she did. It was a town called Vineland, New Jersey. So Vineland, New Jersey is in South Jersey. It's a small town, and it's a really great community overall. Like it's something that whenever I go there, I feel at peace. It's very quiet. That we have great neighbors at the first property that I bought. So I think overall it was definitely a great move for me. And we ended up actually buying the house closer to the end of the year and around December 2017. And we actually went through the whole process. I made sure I had enough for the down payment. I went to Chase to actually verify all my income, verify all of my assets, verify if they would ask for 2 bank statements, usually 2 years of tax returns, just to make sure that you're consistent with your income. And then a slew of other documentation would actually follow as well. So usually every mortgage company would actually give you a list of everything, of all the things that they require. Something about this one was that this one actually was not going to be a personal property of mine. It was going to be an investment property. So usually an investment property has 50, I would say 0.5% to 1% more in interest, and also require roughly 6 months of reserves. So that was one thing that I just learned when I was going into my first property, is that there was usually a higher interest rate for investment properties. And of course there was a slew of other things, like the insurance sometimes is higher because it's an investment property. So a lot of things that I didn't know about as I went into this. I was like, okay, so there's a lot more to to think about here. So I would say as I got into the property, I realized that, wow, so my first property, we closed on it, as I said, in around December 2017. But it felt like a great accomplishment. It was the first house that we bought, and I was over the moon because we finally landed on one. It wasn't the the best style house. We bought it for around $100,000, and it was definitely a starter home. I would say it was a 3-bedroom, 1-bedroom. Three bedroom, 1 bathroom. Yeah, and it had a garage, and it had a pretty nice backyard. Had around 0.34 acres of land. So it was definitely a great first investment, and it was also a great end to the year. So I went through a whole year of EY grinding and doing as much as I could, and then at the end of the day, we managed to secure a house, which was it wasn't something easy, but it was something that we were looking forward to. So overall, it was a great year, lots of experiences overall, and it was a tough one, but at the same time we achieved something that was something that I didn't think we would actually achieve so quickly after only just starting at my company. So alrighty, so this will conclude Anthony's Journey episode 10. I hope everyone has a blessed day, Adios. Keep doing what you're doing. You're doing an amazing job, and I'm wishing everyone out there all the best. All right, until next time, adios.